All right, we are live, the Prospero.ai stock market live stream. Hello, Matt. Welcome back. Hope you got your beauty rest this weekend with that extra hour of sleep we all got because it's going to be a crazy week in the markets, probably. Obviously, we have the election and then an FOMC meeting this week, maybe the most important week of the year for the market going forward. A lot of interesting topics. And to kick it all on top of that, the cherry on top, obviously earnings as well. So just a jam-packed week of events all week long. I have some topics that I brought for today, but I'll let you talk about since you're going to kick off the stream with George once he gets in here, what you're going to speak with him about.
Well, it's good to see everybody. I'm sorry, in an airport lounge today. I travel a lot and just couldn't get away from it. So that's why I'm wearing headphones. Good to see everybody. It's an interesting time in the market. One of the things we've been writing about in the newsletter is just how difficult of a market it's been to read. And for example, our net option sentiment, which you guys knows measures short-term call and put ratios by institutions, we're seeing the QQQ net option sentiment be really high, bullish. It's I think 48 as of this morning, and the SPY net option sentiment, which measures call and put ratios for by institutions for the S&P 500, is at zero. I think it might have gone up a couple of points this morning, and so just got to talk to George about why that's happening and how he's trading going into the election and see if he can help us understand why there's two diametrically opposed set of uh, bets going into this election. Tomorrow? Is it tomorrow, Stephen?
Yeah, well, I think there's some debate going on now. People are voting tomorrow, and it's possible the results could be in, but now there's starting to be concern about if it's very close that you won't actually get a final result tomorrow. So I think that's some of the worry that the market is feeling. Um, and me and George will dive into what the election means and all the outcomes that we could possibly have this week. It was interesting over the weekend. I was following the poly market, which is bets on the election, and as if it wasn't uncertain enough, the odds closed the gap, and then it was kind of like a 50-50 toss at one point. I think Trump went a little bit ahead now, starting today, but it got a lot closer. So it's still very uncertain for the rest of the week. Um, we had some other stuff that had been announced over the weekend, specifically Warren Buffett announcing a freeze in buying back of Berkshire Hathaway stock and building the cash pile to new all-time highs. They obviously report on Saturdays, which is unlike a lot of other companies. So we have to dive into what that means when George gets in here, because I mean, Buffett is the goat of the stock market and investing, and he just continues to pile into cash, which is a bit concerning. And there's actually a lot of maybe concerning stories that we're going to talk about today. Obviously, you mentioned how the SPY net option sentiment hit zero. Um, so that's building on all of these other stories that we're going to get into. Maybe the market is starting to become very worried. We had Jeff Bezos selling more Amazon stock. He has created his own sell wall at $200 for the company. So um, we cover when these big companies, when their CEOs are selling shares, and it's never a great sign. Sometimes it could be just because um, the certain sell signals that they have, but uh, George has never said that it means a bullish sign for a company for the CEO to be selling. And then we have the average age of U.S. home buyers hitting an all-time high. You guys will have to stick around. Just how high it is. You can guess in the comments right now. We'll see if anybody's close. But then we have the FOMC meeting also happening later this week, which on any other week would be the main event of the week, and everybody's eyes and focus would be on that. But now it's kind of taking a back seat. So I wonder if Jerome Powell's like feeling like chopped liver right now. But they are expected to cut the rates by 0.25%. But there's beginning to be some uncertainty about the path going forward, specifically with the election and the different spending plans that both candidates have. So maybe the clear rate cutting path that the market had forecasted is starting to become into question. Then an area of the market where George has said that either way the election goes, might be able to benefit, which was actually crypto, which is kind of a little funny because he's usually a bit negative on crypto. But recently, a lot of those stocks have given back some of their gains. So I want to ask about if it's a good idea to possibly get back in those stocks, maybe either later today or after the election results have been finalized. And then last but not least, before we get into the model portfolio update at the very end of the stream, um, we have had all of the big tech Mag 7 companies report now, I believe, besides Nvidia. I want to ask George if anything has changed in the tech landscape, his power rankings of those companies. Meta has been one of the favorites for a while now. I think Google was kind of slipping and looking less and less bullish as they were under DOJ pressure, but they had a very good cloud number, so maybe they're looking more interesting. And just how the earnings were reacted to by the market, kind of getting a live look at the power rankings of those companies. That the way they go, the way the market goes. Um, but that's all I had for today. And I want to take a look now at the net option sentiments, like you mentioned when you began the stream, Matt, where they're currently at. Because we have the markets, I believe they all opened up red, but they're fighting back now. So maybe a little volatile shakeout to begin before this election. But let me take a look at the live QQQ and SPY net option sentiments. Hello, George. Welcome to the stream. Okay, so QQQ is now at 36, which is below where it's been at in the past several weeks. It's
And
been,
that's
mid
lower
to high
than
50s.
it's been today. I think it was 48 when I looked about an hour ago. So
Okay. So weakening in the QQQ, and then SPY is at 0, which we saw, I believe you said we saw it hit last week, but it was kind of fighting back a little bit, but now it's back to 0. So looks like a definite change from where we've been at in the last several weeks, where SPY has been lower than QQQ, but hasn't been at that extreme low. And QQQ was remaining bullish, but now going back into the 30s. So maybe the landscape is changing. But Matt, you can take it away. I'll let you and George kick off the stream.
hey everybody, good to see you, George. Welcome. Honored to be with you today. We talked about in the newsletter the difference between indecision and discipline. And at the end of the day, we've been missing some opportunities in this market. And it's not because we're sitting on our hands or not making good decisions. It's kind of the opposite, because we're being disciplined in our practice of making trades. And so, man, give us a couple of examples of that. And then ultimately, I'd love to jump into how this market is looking with, up until just literally this morning, we've had a pretty good bullish number reading in the QQQ, but it was 0 at SPY. What's going on? And how do we trade this thing going into the election?
Did you
And so
say QQQ was at 20? I haven't looked yet. 26 or 46?
QQQ
Right.
was at 48 about an hour ago. It's now at 38.
40. Okay, it's
40.
at 40.
Okay.
Yeah. Yeah, I mean, and what we've been expecting is like they converge, and we've expecting QQQ to converge down before the election. But regardless, seeing SPY at 0 is kind of in line with our expectations, that there's a lot of worries going into the election, and that would play out in the market. So that's kind of playing out as we've expected. And, that's why we wrote the letter as we did, because we've been really risk off. And when you're risk off, you miss opportunities. And we talked about, Xerox being one. Xerox, again, I think is having a hard day today. It's been at 100 downside breakout. Its net option sentiment has been bad, but because it is a small cap stock, and small caps have, had, resurgences at times, been volatile, but, had great weeks where even the worst small caps have gone up. We've been kind of avoiding them and staying in larger cap shorts because it's been so unexpected in terms of how behave, how they're going to react to, say, like, positive economic news like we've seen with rate cuts. And even as they relate to rate cuts, we haven't necessarily seen it be, consistently good. So that makes it a very hard market to read. And that one stands out because it's sitting at 100 downside breakout. then there's actually SMCI, which I've seen turn up on momentum score a number of times in a bad way. It used to be one of the great momentum score stocks positively, but it's been a bear a number of times, and it's been sitting at, in the 40s in net option sentiment. And there's a story there. It says, SMCI is a stock that's like typically 80s, 90s, hundreds, or in the 100 in terms of net option sentiment. So to see it down at 40, there's a story that say, wow, this is really bad for this stock. But, in terms of us being risk off, it still was an event-driven strategy around, potential accounting manipulation. And the thing about that is, yes, there was a news story that ended up sending it way further down, and our net option sentiment especially was an indicator of that. Also, downside's higher than upside, which is a classic, certainly tells you a story that this is more of a bear, especially coming from where upside was much higher than downside. So you look at that, but you basically say, on a news-driven strategy like that, where, some people in institutions, whether it be actual information that other people don't have, or just, a better knowledge base in terms of how these accounting things play out, experts in terms of how announcements might happen, what would happen with auditors. That's things that everyday people, even someone that's been in the market a long time, myself, don't have as good of a way to odds make. And there's other ones like AMKR was a tech play that also reported bad. I actually held it, I think, in both portfolios at one time, but I got out as the momentum, shifted a little more positive. So an over 50 momentum score, when I added it, it was in the 30s, and that was just too much in the other direction. But that also had a really bad earnings report. And that kind of leads into something that we talk about a lot, which is, there's a difference between managing risk and making all the plays, right? And I think some people, and the classic example we use was I think a month ago, we dropped Broadcom for, I think, app. And, Broadcom was doing well. The numbers look really good, just not as well as app. It didn't have as high as scores, right? And some people are confused sometimes when we churn through positions, and that's all that it is. We keep a very small portfolio, and we say, okay, we're only keeping one tech stock, and we're just going to take the best tech stock on that day. That's what being risk off is, being really stringent in terms of what you're doing. And yeah, you're going to miss opportunities, but we don't really sweat that very much, because we'd much rather, be mainly neutral where our portfolio has been. We're looking for opportunities, right? But we're looking for well-hedged opportunities. And so we're staying pretty neutral. We've been in the same neighborhood, some weeks the exact same one week to the next. And by the way, that doesn't mean we're not doing well, right? We're already at a pace to beat the market by about 67%, right? So to stay at 67%, we have to stay at about that pace. Otherwise, it's going to move. So that's still doing really well. We're just making sure we stay really neutral because of all the risk, and we're going to pick our spots. And sometimes you're just taking small risks, and some of them hit and some of them don't, and they're kind of balancing it out. But that's what we're recommending, and we're going to recommend that through the end of the election. And if there's any issues, if the election's contested, if there's issues with counting, that's one of the things that we just want to be very risk off for.
If you allow me to tell just a quick story about SMCI, and for those that are new to Prospero, I was long SMCI in my wife's portfolio, which I oversee, and a person that I follow on Twitter, or X, was recommending just buying SMCI like crazy. Just the technicals itself looked really good, but I'm about to pour in some more money to it. But I opened up the app, checked SMCI, saw that its net option sentiment was tanking, saw that its downside was higher than its upside, and chose actually to sell my long position in my wife's account because of what I saw in Prospero. And so that's just a great example, George, of what you guys have created and how it's game changing. 2 years ago, before I jumped into SMCI, I would have absolutely poured into it just based on the technicals, but I was able to see it. And so that's That's pretty amazing. But let me just throw this out at you. I think you and Steven are going to talk about this in a minute, but explain to folks what's going on between the QQQ net option sentiment and the SPY. I mean, there's this huge divergence where last week even we saw QQQ even in the 50s, which is very bullish for QQQ, and then we saw SPY at times down at zero. Just explain to the
Well, I call
normal
it
everyday
bullish. I
investor.
call very bullish in the 60s
Okay,
for QQQ.
okay, my bad, is bullish. And so explain to us normal folks what's going on.
So I think you're seeing what we've been talking about play out, right? I think what you're seeing is people very, very concerned about their election. And if they're concerned about the election, what happens? You hedge SPY. SPY is the most popular thing to hedge. That's going to create demand for puts to gain those hedges, right? So that's going to drive down net option sentiment. And we have seen some people hedge with QQQ net option sentiment. It's not a really good idea to do that right now because there's so much bullishness in it, right? We continue to see earnings just do very, very well in terms of chips, AI related things. Cloud computing did amazingly this quarter, which is very much related to AI, right? So we are getting that story, right? We are getting that story where we could be facing some macroeconomic difficulties, but the big tech companies, especially ones that are automating, we talked about this last week, 25% of Google's code is now written with AI. That's incredible, right? That's a sign of the automation coming. That's a sign of things coming. You know, my article on silent firing, I mentioned it, is, you know, one of the things that I talk about got picked up in the New York Post. You know, I'm not sure I coined this term, but I'm certainly popularizing it. But it's basically this idea that companies have put a lot of investment into AI, right? And one thing I know from analyzing public companies on the buy side is that when companies spend money, they need to show an ROI. So, how do you show an ROI on AI? You're going to be cutting costs in other places. You're going to be cutting headcount, automating things. And what's an even better way to save money? Having people leave instead of firing them. So, the evidence that I actually saw was 73% of Amazon employees said they'd consider quitting because of the 5-day work week. Why would they move forward with that? Well, Occam's razor, simplest explanation is the right one, says that it's because they want people to quit, right? So I think we're going to see more and more of that, but we're basically, I think, in a place where the largest tech companies are the safest investment, even in a bad company, even in a bad economy. And I think that's the divergence that we're seeing. And it's going to be the broader sectors away from tech that are going to be hit the hardest if we do have issues. And even if you're just looking at something like ad revenues, we're doing well. You know, Meta, even though it had other problems, beat top and bottom on their revenue profits. Same with Google, right? And that's another business that with all of this election stuff, ads are going to, you know, we haven't even seen those ad revenues hit the books because they're coming in right now. So we have every reason to expect great quarters from tech on that side as well. Or tech communications officially in a lot of those ad businesses, but they're tech adjacent, AI adjacent. So yeah, I think that that's all very, very important what we're seeing. But you know, anytime you see SPY net option sentiment at zero, we typically see that we call it a zero flat line in bear markets. It just sticks around like that. We've seen it before. So anytime we see it at zero, that means either the market is very concerned and hedging a lot, and it might come out of that. But if it stays there, that definitely means a bear market to come.
Well, I want to say thank you to Matt for joining the stream because he was obviously at the airport, I believe, still. I think he just texted me on the side. I think he lost signal or something. But thank you for joining the stream. A great way to kick off our stream on this fine Monday. But we'll move on from there. I think we lost him. I think we covered the election. I was going to ask about it, but I feel like there's not really much more to say until there's like certainty about it, and there's just uncertainty until the final results are in. So I don't want to hammer on it too much. There's really nothing more in your mind to say about it yet, right? Until we get a result.
Yeah.
Okay. So I'll skip over that. We'll probably have more to say hopefully we'll have more to say Wednesday. Otherwise, there won't be a decision
Well,
yet.
either way, we'll have something to say, but
Yeah,
hopefully we'll have a conclusion too.
yeah. So what I wanted to ask today, kind of building off what you're saying about big tech, is I wanted to get your lay of the land. What are the power rankings of these companies? Has anything shifted in your mind? We got pretty good results, but not great reactions from companies like Microsoft and Meta. Then we had Google that was going into the earnings. I feel like the weakest out of the bunch with the DOJ and the search engine concerns, but they had a great reaction and their cloud number was very good. Apple, so. I think Nvidia is the only one that hasn't reported yet out of that group. Has anything shifted in your mind, or is the lay of the land kind of similar to where it was before the earnings?
I mean, I think we still like Meta the best. And then I think, in a tight knit group after that, well, I mean, I think you have Microsoft after that, honestly. Microsoft and Nvidia, sorry, is the next group, just because they, especially Nvidia, there's so much upside, but there's also risk, right? And there's risk with Trump tariffs. But both of those, Microsoft and Nvidia, are just so well to capitalize on AI. But there are, I'd say, especially with Nvidia, there's more upside than Microsoft, I think, especially in the short, medium term, but there's also more downside risk. Then you kind of have the Amazon of it all, which is the safest, I think, of any of these companies, but it's also overpriced a bit because it's so safe. And then, we're going to talk about the Jeff Bezos sell wall at a certain point, I think, today. Tesla's in its own category because if Trump wins, I'd take it over Meta. I'd take it over anything. Tesla's the best stock, right? But if he loses, I'd say it probably, other than Apple, is the one I'd want to own the least. So spoiler alert, Apple's at the bottom. Google's a little after because I do think Perplexity is a little concerning for them. You do have, I think Microsoft just continues to productize the AI better, and I thought Google would do a good job. But you never want to, as we saw here, you never want to count Google out, because I still think Google, and I've said it a million times, has the best AI brain. And in terms of long term, I think Meta, Microsoft, Google, Amazon, Nvidia, those are probably the 5 companies I'd want to own over the next 10 years more than anything else. Tesla's got too much of that binary risk. And why I say those 5 companies over everything else, some of them cancel out each other well. Like either Google or Microsoft, I think, is going to be dominant in AI. And it could be both of them, right? I think Amazon's kind of like the dark horse there with Anthropic. But either way, I always say own all of 3 cloud providers for the next 10 years. You're going to like what you're doing. Meta's done very interesting things. We say in open source AI, I think they have the best way to engage with a massive user base, better than the other companies. They've figured out how to monetize it really well. Then you have Tesla, as I'd say, probably either the biggest winner or the biggest loser. We can't forget about Broadcom, which I think just replaced Tesla, right, recently, but probably not anymore. Replaced someone, I don't know. But don't count out Broadcom. Broadcom, I think, is also a very, very strong play, especially if you're concerned about Nvidia, which I am. Like, in terms of risk reward, I'd probably rather own Broadcom than Nvidia. But Nvidia we own right now, it's often a better short-term play if you're watching the signals, if you're watching the news, making sure you're going to get out if there's any concerning news. But I probably wouldn't own. I'm probably going to clear out of a lot of names. I haven't really done the analysis yet, but I'm not going to own any chips going into the election. Just because if Trump wins, I think the tariffs can be concerning. I think I'm going to clear out of a lot of other stuff. I'm still debating if I want to buy Coinbase going to the election. I think I might, but I also think if Trump doesn't win outright, there could be problems with Coinbase. It's one of the toughest things to call that I've seen, but I'm probably going to go very conservative, put a very small portfolio together tomorrow.
And I was thinking about crypto. A lot of them have given back gains. I might ask you about it at the end, but I want to get to now this headline we got over the weekend of NVIDIA replacing Intel in the Dow Jones. Which company does that affect more in your mind, NVIDIA or Intel? And excuse me, with you saying like you don't want to own any semis because of the tariff risks and the Trump possible like headline risk of these companies, would Intel be a beneficiary of that being an American company, which I believe, if I'm not mistaken, like most of their products are even made in America. So maybe they would be a benefit of that. What do you think of that?
They could be, but it just shows how far like Intel has fallen. Like I just think it's one of those things, there's sometimes you do have to go with some Buffett fundamentals, and the Buffett fundamentals tell you you don't want to own companies that you don't love the management. And I think it would be really hard to make a case for loving the management of Intel. But there's no doubt, I mean, it's a sign of NVIDIA's emergence, right? The Dow is like the old guard, right? Them being added to them is kind of them, maturing in a very, very clear way. So I think that does make them more interested. I'd be owning NVIDIA for a bit now to see it get added and to see the run up from it if I wasn't a little concerned with the election. But as I said, we'll probably sell it sometime between now and before the election.
Mm-hmm. And that's a short-term play, but if you're a long-term investor in Nvidia, this would be bullish news, right?
Yeah, but I still wouldn't own it through the election.
Okay. So you mentioned before how the Jeff Bezos sell wall for Amazon has been firmly in place for most of this year. Every time the stock hits 200, he has an instant sell order, it seems like, to sell some shares. We just got the latest case of this happening last week where he sold $3 billion worth of the stock, and that equates to 16 million shares about. Um, can Amazon's stock break through this wall? And what's it going to take? Is Jeff Bezos going to have to stop selling shares for Amazon stock and shares to go higher?
Well, I think what's really funny about the Bezos situation is you actually see interviews from him where he talks about that, like, I think that was his childhood dream to like go to space and have like a rocket ship company. So the one thing with Jeff Bezos, never underestimate his long game, right? He was willing to play the long game with the books. He knew how he wanted to enter, and now it's just become what it is. But it's just like you gotta respect someone that even knew that books could build this empire, right? And that was the angle. He just knew it was the right market to attack, and it was right. There's no reason that people should have been buying books in bookstores the way that they were, especially because like even if you have a huge bookstore, there's no guarantee that you get what you want. And it was also a pain in the ass to look for them there versus like they're the perfect thing to just like search for on the internet and then also see recommendations. It was brilliant, right? So he's been planning this space thing for a long time, and it's expensive to fund rocket ships and a lot of the other things. I think he funded Perplexity and everything like that. So I think while Amazon is a great investment over the last 10 years, I think he's made his huge return on that. He'll still own Amazon stock. He'll still get that upside. And he's just going for bigger upside things. And that's just what happens when you have a mature company. But I think a lot of it is he wants to fund the space thing. I really do. I think all of these billionaires and their dick measuring competitions, they all want to go to space, and he wants to have the biggest one.
So it sounds like it's really not an indictment on Amazon, the company. It is purely a Jeff Bezos, funding. He's using that as funding for his space dreams. You would say it's not really, because before we talk about stories like this, it kind of, you've said like it's never a good sign for a CEO, or I guess not a CEO, but a large shareholder to be selling shares. But in this case, it doesn't really seem like it's a negative on Amazon, the company.
It might be a slight dig at Jassy, you know, if we're saying like, but it's just like, and the dig is, you're not Jeff Bezos, right? Jeff Bezos probably has more faith in himself to run any company than he does anyone else. So, right. Yeah. In a sense, I think if he was still running it, doing everything in the day to day, I think he might still be there, that Amazon is the best investment. He might be selling less shares, but I just think where he's at, he's probably really helping to run Blue Ocean. He's helping to run these other things. And he probably just, quite frankly, he does want to diversify. He does have other interests. And I think he has faith that his influence can accelerate the growth of any company that he's involved in. And these other companies just have more to grow. I mean, just like look at Perplexity, for example, right? You know, people say he's very influential there. And like no one's been able to touch Google search all these years. All of a sudden, Bezos is helping out a search company, funding a lot. All of a sudden, hey, it's doing pretty well. Nobody understands business like Jeff Bezos. And I think it's just, if anything, it's more of a vote of a confidence in himself that he can deploy money in younger ventures and see higher growth rates, higher returns than you can at Amazon. That's such a mature company that I just don't think he even has as much interest in running anymore. He's like won. Amazon's won already. He wants to go win somewhere else.
We're going to talk about Warren Buffett in a second, but what you were just saying kind of reminded me, like, it seems like Jeff Bezos is the Warren Buffett thing that you always say, where he invests in a company and it helps them operate. It seems like Jeff Bezos is kind of taking that approach where he has many different interests. He'll take an investment in a company, and then it sounds like he kind of helps their business operations and the strategy of the company to proceed. And I haven't checked out Perplexity yet, but I think I have to. The way I'm hearing a lot about it, so I'm going to check it out later.
It's cool, you know. It's like it's a little bit more. I mean, there's like my biggest problem with Google at this point, like, is just sometimes you're like, it feels like you're scrolling for like a minute before you get through the ads, and that's super annoying. Like, especially because some of like, I'd say what's more annoying than the scrolling is some of them are like pretty reputable sites that I would otherwise click on. Like, you know, if I'm looking like a list of like a best mattress or whatever, and you see like, you know, Sleepopolis or whatever, this is not a direct example, just a rough example, right? It's like, I would otherwise click that if I didn't see it. And now I'm just wondering if there is such thing as organic anymore, because maybe Sleepopolis that would have a good rank just has to pay to be higher, but then I don't even know. You know, it's that's what's confusing, and that's what I think where there's room for improvement. But yeah, I think he's helping to run these companies, and I don't think anyone knows how to do it better than Jeff Bezos.
Okay, so we've covered the Buffett cash pile before, but it just keeps on growing. Berkshire does something a little different than most companies, where they report over the weekend. So they reported on Saturday, and there was two major headlines out of this. So Warren Buffett announced that they are freezing buybacks, which seems to indicate that they would expect that there could be some trouble in not only their stock, but I guess the entire stock market. And then they are also now holding the highest cash they've ever held, $325 billion worth. They sold a quarter of their remaining stake in Apple in the last quarter after selling earlier this year. So I feel like when we've talked about this Warren Buffett cash pile growth before, we were talking about like, maybe he sees some trouble in stocks, and it's possible he could just be playing it safe. But it seems like at this point, with how it continues, it's almost a certainty and a definite that he's signaling something troubling is afoot. So what do you make of it?
Yeah, I mean, Buffett is a very, I think we're seeing two things at play. He's very macro driven, and the macro setup isn't great, right? There's some big like mounting concerns like consumer debt, there's political risk, there's geopolitical risk. All of that adds up to not a good situation for Buffett. But I also think it's like the classic example of, I told you, of him passing on Amazon, that he actually says is one of his biggest regrets, because value investors say they don't invest in tech, or they didn't when I was trained as a value investor. They said, we don't invest in tech at all because we don't know how much of the price is, how much of the growth is currently built into the price. And that's true. It's very hard to determine how much growth is put into the price in tech. However, I think one of the issues is the way things are valued, right? And I think some of the best buys, in my opinion, right now, you can't make a value case for. And that's really tough. And I think that that's his problem, right? He probably is looking at this market and not seeing the valuations that he likes to see. So even if he didn't have macro concerns, he's not seeing his preferred valuations, and he wants for them wait to come back. And that's the thing about Buffett. He might know fine and good that he might be waiting a year or two or whatever, but he is right that the big correction is coming. Right? It's going to come eventually. This global debt is going to catch up to us. This consumer debt is going to catch up to us. But our philosophy is that at Prospero is that we stay pretty, when we're worried, we stay pretty equal long short. And that's not really his style. And we'll ramp up the shorts and go more short than long if it calls for it. And if you have a willingness to do that and manage risk in that way, any market is for you and you don't have to go to cash. But if you're a long only investor that is driven by valuations, yes, it makes a lot of sense to go to cash right now.
And you got to give Buffett kudos, like you're saying, he's playing like a year to 5 year type of theory here at 95 years old to still keep the long game in perspective. But also, so when he finally decides to put this cash to work, how do you think it'll come? Do you think he's going to buy these stressed assets and buy out companies entirely? Is he going to sprinkle it around and buy maybe into these mega cap tech companies for cheaper, but like not buy them outright, obviously, but just make large investments? What do you kind of think is going to be the outcome? And when that takes place, is that a good sign that the market is bottoming or in a bottoming process when he finally decides, when we see that cash pile start to shrink?
Buffett is the ultimate objective investor, right? And it's smart. If you want, this is one thing, we're not necessarily that similar in our philosophies. If there's one thing that we share, and you saw it when we went into like Coinbase heavily, right? And we don't like crypto. We say for a while we don't like crypto because the options markets are non-transparent, and that makes it incredibly risky to trade in. But we went hard in it, right? And I think that's earlier this year. And I think that's what we share. Any good investor is flexible and opportunistic. And I tell you this story because he made a great investment at one point, bailing out the banks, right? That's what his cash pile was for. Again, he had a pile sitting around, and he had a great secure investment that he was going to get a return on. I believe he got himself some preferred shares, some voting rights. He swooped in and made himself a great deal, high reward, low risk, short-term capital turnaround. That's what he's leaving it for. And he's open to anything. He's open to buying companies. He's open to, buying minority stakes with good voting rights and preferred exits. He's a great deal maker. He knows how to structure them. He knows how to come in and manage the risk reward. And granted, and we've said this before, that doesn't mean a Buffett style investing is for everyone, right? Because not everybody could say offer hundreds of millions of dollars out of write a personal check like that to a huge bank, right? Not everyone can do that, but you should take on his philosophy, which is being opportunistic and flexible in terms of how you structure. And the best thing for flexibility is always capital.
And it seems like he has no problem, if things get a little maybe overbought and he misses the first wave of something, he has no problem waiting. And it doesn't seem like he's made a major AI investment. So that would be very interesting to see if at the point where the market was struggling, if he was to invest heavily in a company like NVIDIA, or which one of the AI players he chose, Broadcom or any other of the names. I think that'd be
I could see him. I think Intel is more likely and trying to turn them into an AI player than NVIDIA, right? You got to think valuations. He wants to buy things at bargain basement prices, or at least good prices, And I don't think he's ever going to see NVIDIA as a good price.
Mm-hmm. And you said Intel, I guess the major problem is the management. So if Buffett knew he could fix that, it would be interesting. So
Exactly. That's why that's his kind of investment.
yeah, interesting. I would like to see our prediction come true there. That'd be interesting to see play out. You've mentioned crypto a few times already, and I was possibly going to ask about the end, but since we mentioned it, I think I'll ask about it. So I've noticed recently a lot of the crypto names have given back some of the gains that they kind of had gotten maybe when the market thought Trump was definitely going to be president. Now it seems a little bit more uncertain, 50-50. Are any of those interesting to you right now, or do you want to see the outcome of the election and then possibly get back into them? Or are you just going to wait and see how the signals play out? How are you feeling about those names right now?
I'm still thinking about it. Like, I think if I do hold something like tech, anything with risk heading into the election, it will probably be Coinbase. But I'm making a game time decision. I got to see how the markets look heading into it. I'm not sure. It's a tough call, but I'm leaning towards just de-risking everything, and maybe only in my high conviction portfolio, maybe only owning like 4 or 5 stocks total.
I saw over the weekend Kamala Harris on her Twitter account tweeted, I think, in support of marijuana stocks or business. Um, do you think over the next month or two, when someone is selected, we're going to get a lot of headlines and there's going to be opportunity to trade off of that? Or is that the type of momentum stuff that you don't like? How do you feel about that when a candidate is selected and then they announce stuff? Almost always, I feel like the stocks and the sector bounces, but I don't know how sustainable it is. And how do you feel about like headlines like that moving stocks?
The one thing I'm sure about is that even if it looks like the votes favor Kamala in any kind of close race, that we're not going to get anything conclusive. So that's why, even like, yes, I do think marijuana stocks will do well under her, but are you going to get that boost on election night? I don't think so. So I'd rather wait to see some more clarity on who is actually going to take office before I do that.
I think it'd be really interesting if you, I guess there's no way to know, but like how much cash is just sitting on the sidelines right now, waiting for that the moment that like a candidate is chosen, and then all the algorithms just like pour the money into whatever sectors, markets that it's got to be like hundreds of billions, right?
Yeah, I mean, if it looks like it's going to go to Trump, like, and that might be an interesting, as the votes are getting counted before they come in, like, you might want to take a look at what Bitcoin is doing and figure out, I might actually just get in if it's looking like it's going to go his way. I might actually just buy myself some Bitcoin.
Hmm. I mean, I remember, they had that Bitcoin conference earlier. I think it was in the summer, maybe like July or August. And I believe if Trump's elected, the U.S. government's going to be buying Bitcoin daily. So it's like it's not even it's like a hard fact. I feel like that there's Bitcoin will go up no matter what if Trump is selected. So I don't think that's a bad bet. But yeah,
Yeah.
it's crazy. We've been talking about this for months, and now we're 24 hours away, hopefully, from a decision. But we'll see as it plays out this week. Okay, so I saw this concerning stat, and I wanted to bring it up on the stream. I don't know if this will affect your view on the overall economy or maybe just real estate, but the average age of U.S. home buyers jumped to an all-time high, um, and that all-time high is 56 years old. Which, when I saw that, it sounded just so high to me. I was shocked. Last year in July, so just over a year ago, the average age was 49, and the share of first-time home buyers dropped from 32% to 24%. So, do all of those metrics indicate a weakening economy, or
Wait,
is
the
that
average age of the home buyer is 56, and what was the second one?
uh, it's 56 now? It was 49 last year, and first-time home buyers dropped from 32% of all homes sold to 24%. So, is that
To who?
in first-time home buyers, the
33 to
share
24% of who?
first-time home buyers?
Oh, first time. Oh,
Yeah, their share. So is that an indictment on the real estate industry and the prices of homes in America, or is that a larger problem that we're seeing that, you know, a large cohort of America isn't, you know, accessing the home market?
I mean, I think I think the problem is there just aren't as many, there's not as many good jobs available for people graduating. And there's just like, it's a wealth concentration problem driving up the prices, right? Not only is the job market, there's not as many good paying jobs, I think, especially for young people, right? You're also seeing a situation where, I think BlackRock is like the biggest home owner in New York, right? So, I mean, in the US. So that's going to just like keep driving up the prices. And that's the real problem. Like, how does some college graduate compete with BlackRock, even if there were the same amount of jobs? And I wonder how those statistics work. I mean, maybe they just like, for the age, that just gets like, um, canceled out. But I think that's the major problem, and we're basically not seeing that change, and we're basically seeing, I think there's like statistics about more and more people like living with their parents, right? It's just, it used to be something where you could get better access to, you know, in terms of like the median income could buy you a house. But now that's just raised so much. There aren't as many jobs there. And then, also that, the jobs that are there, people are less interested in doing. People are more interested in just like coasting off their parents when their options are like, oh, why would they want to, if they can coast off their parents, why would they want to like get an entry level position where even if they get that, they can't even afford a place that they want to live in? Like, there's so many places now where a job, just like an entry level position, doesn't actually pay for a rental, let alone buying. So like, we're basically seeing our country get sold down the river by both political parties in terms of what they do for the everyday person. And yeah, I mean, that's a shocking statistic, an average age of 56 right there. That just says, it is not an economy for everyone anymore. It's an economy for people that already have money.
And I think for most like everyday Americans, most of their net worth is in their home equity. So, I mean, I only see two options for resolutions of this stat. Either people earn more and are able to purchase the homes earlier, or the home prices come down drastically and then they're able to afford them that way. I think either way, it's unsustainable for the average age of homes to be, you know, this old. So if it's one of those two options, either people earn more and they're able to afford the homes, or the home prices drop dramatically and then they're able to afford the homes. How would that affect the stock market, the business world? Um, is there anything we could read into that now, or is it too uncertain?
I mean, I don't think that's really realistic. I don't think, like, maybe we'll see a correction in the real estate market, but the problem is what's happening is I think we're seeing it's harder to afford a home. And then the people that afford it are people who are just buying 4, 5, 6 homes, BlackRock, thousands, hundreds of thousands of homes, right? That's the real problem. Like, it becomes more affordable. We're going to see financial institutions do the same thing that they do. They know when they go to cash, they have their high frequency traders exiting, and they're just going to like, that's the problem. Every time we see these corrections in the market, we basically see an extraction of people that don't know how to play the market, that pull their money out at the way down too late and then get in too late. And then we have smart money getting out early and getting in at the bottom and deciding when it's the bottom. That gets them more wealth. That's why BlackRock owns so many houses. And we're just going to, there's nothing currently that gets us out of that cycle. Prospero is trying to help with that, but nothing else that I see.
And the final point on this topic I feel like I think it's dynamics like this, and it's the situations you're talking about where young people, you know, can't afford stuff in today's economy, that drives people to, you know, get into this gambling culture that we see now in America, and it just seems like it's like a death spiral almost of the economy and people affording goods. So it makes me nervous, and I don't know. You're saying you don't see, like what I said wasn't realistic, so that doesn't make me feel at ease about the whole situation. Um, I don't know. I guess we'll just have to watch it play out and hope for the best. Like, what else can you do? Does the government need to take action? Like, how, if it doesn't ever get resolved, like, what is the outcome? I guess wealth is just accumulated at the top more and more.
Yeah. Not only is that happening, not only do you see basically people that have wealth have access to better investments that accelerates that wealth increase, or buying more property, and that allows them to buy more. You also see these things where the banks get bailed out, right? When you look at these crises, banks get bailed out. They don't have to like exit their assets. They get support, even if they're the ones creating toxic assets. And then everyday people get wiped out. And it's the banks that can go in and buy things at the bottom, and they get all the appreciation. A lot of the times they're shorting it down, and the cycle is continuing. And the government doesn't want to help. But even if they did, I don't think they'd know how. Like, it's at this point where we need places, like I said, like Prospero. We need private solutions because the government is useless and corrupt.
Amen. Okay. Um, I have one more topic to get to before we do our switchover, but before I get into that, I'd like to thank the 1,000 viewers, over 1,000 viewers we've had in our stream today. Thank you guys so much for tuning in. Hopefully, the topics we covered are helpful for you on this important week. Just if you guys are new, if you have any questions, stuff we haven't covered, stuff you want to hear us cover more in depth, feel free to comment them right now. We'd be happy to get to your questions, concerns, or comments. But this week, we have a FOMC meeting, which on any other week would be like the main event of the entire week. But now it's like at the back seat, and almost nobody's talking about it. I think it's widely expected that we are going to see a quarter point cut later this week from Jerome Powell. But I've been hearing rumblings about how the path going forward beyond this cut is becoming way less uncertain, especially with the election outcomes and some data we've seen where the economy seems to be stronger. I believe we got a good jobs number recently. Um, so, what do you feel about this rate cut, a quarter of a point? Do you agree with that? And then, if the Fed kind of signals that they're not going to be as quickly beyond this meeting to cut, does that change your perspective at all, or how do you feel about that?
Yeah, I mean, we're looking at an almost 99% chance that we're going to get a rate cut. So, I don't think it's going to, like, when you see that kind of assurance, that's already baked into the market, you know? So I think the big thing is the election, right? I don't think anything that like, it's almost assured that the Fed is going to cut 0.25% at this point. I think what they say is interesting. I do think that they're going to want, but I don't think they're going to give us any meat. And I just think whatever they say is going to pale in comparison to the signaling of the election.
Jerome Powell doesn't seem like one to give too much insights. He kind of lets the market, I feel like, decide, and then he kind of speaks broadly. So you wouldn't expect him to make any headline statements at this meeting this week, would you?
I think he's going to be especially neutral also because he doesn't know who his next boss is going to be, right? So I don't think he's going to want to say anything that's going to like piss off either side. And so I think he's just going to be, I think he's going to be even. He's normally very neutral. I think he's going to be even more neutral than normal. And he's just going to be like, we want to see the data, blah, blah, blah. The surprise would be if he actually talked about the election. Like, that would be the surprise. I think he might just reference to the fact that like that there might be a different political situation. But if he actually talks about the election, that would tell you how much he's looking at that. But otherwise, I think he's going to be pretty neutral.
His next boss, the Fed, is independent, George. He's not going to take any. Yeah, we know how that goes, right?
Yeah,
um,
yeah, of course. Especially Donald Trump. He doesn't have any ways of getting people to do what he wants, right?
yeah.
Very
Um,
hands off, that guy.
So, live look at the markets. We are red across the board, except for the Russell, but they are all starting to give back any gains that they had. I see Tesla's down. I see Google's down. I see Bitcoin's down. Looking like a volatile day. I think we are ready to do the switch over. I'm very curious at what we're going to see in the signals when we take a live look. So everybody stick around. We'll catch you on the other side, George.
Yep.
All right. And for those of you who are sticking over with us, I'm going to give you a live look at the Prospero net options sentiment that we are seeing for the markets. Obviously, we've been signaling for a while now that the volatility is going to be high before the election. It seems like, honestly, so far, we've had a best case scenario where, I mean, although we've seen some dips, you can't really complain with the market being so close to all-time highs, I feel like. So a little bit of volatility on the days before the election, I think was almost a best case scenario. But let's take a live look at the net option sentiment in Prospero, and hopefully this volatility doesn't continue and we see a resolution. I was seeing a graph shared on the FinTwit sectors of Twitter about how the market's performance post-election results has been very good in years of elections. So something to keep in mind. Uh-oh. A live look at the QQQ. We are at 25 currently in net option sentiment. So dipping down lower, and in SPY, we are at 0. So truly starting to give back some of those bullish signals that we were seeing in the net option sentiment in Prospero. I'm very curious now let me take a look at some of the stocks we were talking about on today's stream so far. So Tesla, let's see if that is kind of looking bullish or bearish heading into this. So Tesla's net option sentiment is at 96, upside at 92. So not currently seeing a give back in those much. And then let's look at coin. Coin is at 100 in net option sentiment and 98 in upside. So also still looking bullish. So not seeing too much of a give back in those names. George, you know what would be interesting? I feel like if there was some way to like analyze the data of the stocks that like we have said could mean like would be benefit from Trump, like Tesla and Coinbase, and then like make a Prospero prediction based on the signals we're seeing of like where companies are betting, like how the election is going to play out, maybe in a future cycle, seeing where the money is like predicting of the outcome of the election. I guess sometimes it's not so clear cut. Like this election, Tesla is an obvious one that you could look at, but maybe in future cycles, it's not going to be so clear.
Yeah, the problem would be making a comprehensive list, you know?
Mm-hmm. So I did look at QQQ and SPY, and it is continuing to go lower. SPY is at 0. QQQ was at 26 in net options. So
Whoa.
now it's at 25 also. So
We are going to flip more bearish. What's the screener doing? I think we might have a bearish screener or no.
Yep.
Oh yeah. That is good. We want that. Okay. I think we want to get everything set up.
If you're expecting wild swings and like volatility in each direction, is UVXY a good way to play that, or the VIX?
Yeah, it's not bad. I mean, you can also straddle what you think is good too. Like that's always an option. But yeah, it really depends. Okay. Getting everything set up.
Did you enjoy your extra hour of sleep yesterday?
It was yesterday. Oh yeah, I did. Yeah, I did notice it felt. I didn't really notice, but like I did notice it felt a little early.
gets dark so early now.
Yeah. Okay. We almost have everything set up. Oh, I feel like this whole election thing is just emotionally exhausting.
You're ready for it to be over, right?
Well, it might not end right away, you know?
Yeah.
Let's see. I got that set up. I need this. I got momentum score on the way. All right. Time to share. Sharing is caring.
QQQ net option sentiment is at 26 and SPY is at 0. We have been predicting a downward convergence, so there is no reason, given this, that we don't head more bearish. Utilities continues to be the main clear bear. Financials have taken a turn though, and we will look to pick out bears in that areas. We may look for an energy long. Growth looks like the target here, except the bad movement on the 1 week for large capital complicates things. Does not change our strategy. Still more bearish, much as some of our bull picks are in that area. And we will trim.
this right. I think I want to replace this. Make sure we grab an energy. Wait, why did we miss that? Dyno in here? Dyno's not going to work. All right, we're going to do PAA. A little hack here. Anything else? I already have this and this. Make sure we have. I'm giving us some financials options. All right, what do we have here? All right. I'm looking at. I only want 3 of these. All right, HAG looks good. Why not get one of these utilities? doing that. Okay. And we have a lot of NVIDIA. 29. I wish we could Adele because it's doing so well. Okay, let's look at the shorts. Yeah, we're already pretty close short long. That's good. Okay, I think that is everything. We're going to send in a minute.
I think you said Dell was looking good in the signals, and I was reading that they could be one of the primary beneficiaries from the SMCI kind of saga. Maybe maybe business overlapping there.
That makes sense. All right. So we are done.
We are concluding. So we will be back Wednesday, 3 p.m. with hopefully some fun things to talk about. But until then, everybody, watch out for this volatile week, but we will be back. Happy investing. Happy Monday. Going to be a great week. See everybody then.
All right. Thank you.
Bye.